Hello, everyone. Good morning from this part of the world, and depending on whichever part of the world you're tuning in from, good afternoon and good evening. I'm so excited as always to welcome you all to another promising edition on the Forex Morning Mastery session. In fact, our last trading day, last trading session for the new week. Welcome back, and it's the end of the week, and as we all know, Fridays in the currency markets can be a wild ride, with everyone wrapping up their trading positions ahead of the weekend. And due to this situation, we usually see increase in the level of volatility in the market, and that is exactly why it is crucial for us to be prepared and get ourselves and strategically position ourselves for the next move. So today we will be diving deep into the nitty-gritties in the market, taking into account the most important event for the week, that is the NFP report today, analyzing its potential impact on the market and strategizing how to navigate this potential volatile environment. And also, we also take into account the fact that the potential of profit-taking activities could come into play, where we are likely going to be seeing market participants doing some profit-taking activities ahead of the weekend, which usually reflect on the chart as price action moving in the opposite direction of the prior leading price action. So we are also going to be taking this into account. But one thing I do know for sure is that today we are likely going to be seeing some high level of volatility. So there's the last trading day of the week, and of course the expectation of the NFP report, which we all know, we've talked about this all day long, how the Fed chairman had emphasized the importance of labor-oriented data to decide the magnitude of the interest rate cuts coming up in 2 weeks' time. So in preparation for today, I do have very simple, as always, insightful trading setups that we are going to be using to navigate today's market expectations. So I encourage us all to stay tuned in so you don't miss out on the ideas I'm about to share. And for those of you who are joining in for the first time, you're highly welcome on board. Very excited to have you around with us this morning. And let me quickly just put it to you what the Forex Morning Mastery is all about. Well, this was an idea that was born out of the necessity to do follow-up details on all of the assets I shared during the course of the weekend. Now, during the Forex Morning Mastery, which obviously comes 3 times in a week, that is Mondays, Wednesdays, and Fridays, we come here to see how well these assets are doing so far in the week, and of course use the information, the historical data we have on the chart in conjunction with the fundamental factors to make an informed trading decisions ahead of that particular day. And I also want to state here that this is not a signal service platform, but an educational avenue where we come together to understand the behavioral patterns of market participants and using that information to strategically position ourselves for the next move, irrespective of whatever type of trader you are. So if you're a scalper, day trader, swing trader, or positional trader, you can actually use this information here to help you in making your decision on whatever type of strategy you have adopted. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that can help us to strategically position ourselves for the next move. Now, based on the asset we have been monitoring since the beginning of this week, we are focused on economic features from both the United States and the United Kingdom economic dockets. Now, the high impactful event did not start until Tuesday, though it was scanty, as in the major ones didn't come until Wednesday, Thursday, and of course today is going to be another highlight in that regard. However, during the course of the week, we had some mid-tier economic features that we also took into account when there was no high impactful event, especially from the United Kingdom economic docket, where you will see that there was no high impactful event from that economy this week. So one of the events that also played a key role in determining the sentiment in the market especially for the British pound is the BRC like-for-like retail sales data, which came in on Monday. Now, the retail sales data usually gives us an insight into the consumer sector of whatever economy, as it tells us how much consumers are spending in that economy. So if spending increases, it shows that consumers are feeling confident about the economy, which is usually seen as a positive development for that economy. Now, the BRC like-for-like retail sales data came in higher than the previous month at 0.8%, which was a positive signal for the British pounds. And of course, the British pounds also capitalized on the weaker US dollar to gain some traction during the course of this week. Then on Tuesday, we had the ISM manufacturing PMI. And for those of us who do not know, this is a key economic indicator that measures the health of the manufacturing sector in the United States. And the PMI is an index that ranges between 0 to 100, where anything above 50 is considered as an expansion in that sector, and anything below 50 is considered as a contraction. Now, if we look at the data that came in from the ISM manufacturing PMI, in fact, in the last couple of months, the data hasn't gotten above the 50 mark. So last month we had a 46.8, and for this month we are looking at 47.2, though it was a little bit higher than the previous month, but it wasn't really up to that mark that we can say it is a positive one for that sector. Then fast forward to Wednesday's session, we had a couple of mid-tier economic features to look out for. We had speeches from the Fed policymakers in the United States, and the most important one on Wednesday was the JOLTS job openings. And like I did mention earlier, labor-oriented data is what majority in the market are looking forward to, as emphasized by the Federal Reserve Chairman that this will be determining whether or not they will be increasing the magnitude of rate cut to 50 basis points or 25 basis points. Now, the JOLTS opening came in at 7.673 million, lower than the previous month, and in fact much more lower than what market had expected, giving us signs that the labor sector is not doing pretty well at this point in time. Then on Thursday, we looked at a couple of another event. We looked at the ADP employment change, another labor-oriented data, which gives us an insight into the number of new jobs added in the United States private sector in the last month. Now, if the data comes in higher than market had expected, it shows that the labor sector is growing and expanding. But if it drops, then it's a sign that the labor sector is not doing pretty well. Now, the that the ADP data came in at 99,000, which was way below the previous month, and of course way below market had expected. Another red flag right there as regards to the labor sector. Then the ISM services PMI data came in on Thursday. That was yesterday as well. A data that gives us an insight into the performance and expectations of the services sector in the United States. A higher than expected data typically signals economic expansion, hereby boosting market sentiment. And we saw the ISM service PMI on Thursday coming a little bit higher than market had expected, way above the previous month. A little bit above the previous month and a little bit above what market had expected, showing us some positive influence from that sector. And did this really affect the US dollar? Not really. The US dollar tried to gain some momentum during the course of the week, but it wasn't really that much due to these bearish sentiments around the Fed interest rate expectations. Now today, Friday, September 6th, we are going to be looking forward to some major events today that will be playing a significant role in determining the direction of the price of the US dollar today. And on the list here is the average hourly earnings, a labor-oriented data as well, which measures the change in pay for workers in the United States, and it is a key indicator of inflation as well. If wages are rising quickly, it could lead to higher inflation, prompting the Federal Reserve to probably maintain the current interest or even increase it, which often strengthens the US dollar. However, if this data comes in way below market had expected, then this could further support a higher increase in interest rate cuts, maybe looking at a 50 basis point. So as you will see here, the month-on-month and the year-on-year expectation is 0.3 and 3.7% expansion. So we are looking forward to see what the actual data is going to be. Will it be just as expected, below expectations, or even beyond expectations? Then the major one that everyone is looking forward to today is coming up in about 3 hours from now. In fact, all of them are coming in simultaneously, is the US non-farm payroll. Now, this is the major one everyone is looking forward to, a labor-oriented data as well, which is considered to be a key economic indicator that shows how many jobs were added or lost in the United States economy. And of course, this data exclude the farming sector in the last 1 month. Now, a strong report usually signals a healthy economy, which can lead to a stronger US dollar, while a weak report can have the opposite effect. Now, from the narrative from the Fed Reserve Chairman during the Jackson Hole Symposium that was last week, he did emphasize that interest inflation is easing. That is one fact. And secondly, they are in a dilemma right now whether to cut interest rate by 25 basis point or 50 basis point. Now, he had turned his focus to labor-oriented data to decide if it's going to be a 25 or 50 basis point cut. Now, the non-farm payroll is one of the major events that majority in the market will be looking forward to the Fed officials will be looking forward to decide this factor. Now, looking at the data here from the previous month, remember this was revised a couple of weeks ago, showing that jobs were dropping in the United States. So the previous month came in at 114,000. That is for the month of July. And for the month of August, market participants and economists are projecting 160,000. So will the actual report come in just as market had expected, or will it come in below market expectation, or even come in higher than market expectation? But one thing for sure is that we all know the dynamics around this, and we know what to expect from a theoretical standpoint. So these are the major events that majority in the market will be looking forward to today, and in fact much more later in the day. In about 6 to 7 hours from now, Fed Wallace is going to be speaking. Christopher Waller is the Federal Reserve Governor for the St. Louis Bank, and is also a voting member of the FOMC. So whatever he says today will also be carrying a lot of weight, especially after the non-farm payroll report. Now, one thing we do know here as technical traders is that the anticipation of this event usually has its own way of influencing how the market participant will behave, which we shall be seeing or reflect on the chart as price action evolving into structural patterns that will be giving us a clue of what market participants are likely going to be doing. So we will be diving right into the chart right now. Let's look at things from a technical standpoint. Let's see how market participants have digested this information so far this week. And of course, we are also going to be looking to see what structures or patterns that this has evolved into that will help us position ourselves strategically for the next move. So as always, the first asset we usually take on every morning is the USOILSPOT. And what an interesting situation we have on the USOILSPOT this morning, as you will see that in the last 2 to 3 days now, the market has been consolidating, confined within a range-bound structure at an area which is considered to be one of the lowest point price action has been in the last couple of months. Now remember, at the beginning of this week, we were actually looking at we actually bought at some point in time, which did not last long before the bearish momentum began. So let's quickly take a rewind and look at what really happened at the beginning of the week. Now right here at the beginning of the week, right on the 1 hour time frame, of course, which is our execution time frame, we had a couple of factors that were supposed to be guiding our trading ideas for that particular day. Now, one of which was the observation that price action was oscillating around our key level. Remember, our key level for this week was at the $73 area, which was duly identified on the 4 hours time frame. Now, you know how we use our key level. So for those of us who are just joining for the first time, let me quickly explain in a short, precise form. Our key level usually serve as a key determinant of where price action is likely going to be for the following week, and it also serves as a criteria that makes us feel comfortable in whatever position we are in. So to simply put, if price remains above our key level, we want to be looking out for patterns and structures that support the idea of buying. Now, if price drops below our key level, then we will be looking out for selling ideas. Now, with this in mind, we had price action confined within a range-bound structure just right around our key level, giving us a consolidation phase, as you will see here. Price confined within the $73.60 level and the $72.85 level for the first 8 to 10 hours of the beginning of the week. And whenever we have this kind of range-bound structure, what we usually do is exercise patience and wait for price action to either break down the support line of that range-bound structure to give us an opportunity to sell, or the breakout of the resistance line of that range-bound structure to give us an opportunity to buy. And of course, during our live session on Monday, I told you I had the buy position triggered already, but for those who missed out, that we could wait for price to come back, retest the resistance line of the structure to trigger another opportunity to buy. As you will see, price did move a little bit, I think about 70 pips in our favor before the bearish momentum began. And of course, you know how we do it. Whenever price moves in our favor, we move our stop losses, secure some profit here, and if you had done so, you must have been taken out of that buy position with a modest size of profit, or at a worst case scenario, break even. And this is subject to wherever you had moved your stop losses to. Now, in my commentary on Tuesday, giving you an update into what the structure is saying, we had a couple of more factors to guide our trading decisions for Tuesday's trading session. One of which is this newly identified ascending trend line. As you all know, when price remains above our ascending trend line, we want to be looking out for bullish ideas. And as a result of this, I included this resistance line at the $74.30 level as an area where we will be looking out for new buying opportunity, as it's sitting just right above the ascending trend line. And in addition to that, I did acknowledge that we are within a temporary demand zone for the first 24 hours of the week. As you will see, buying around this area. So we said this demand zone and the ascending trend line will be playing a key role for Tuesday's session. Now, if price maintains above the structure, we're looking out for buying opportunities. But if price breaks down the structure, then we want to start considering selling. And this was exactly what happened on Tuesday. As you will see here, price did break down our key level, break down the temporary demand zone, welcoming selling ideas. And for those of us who did not place a sell stop order below that structure, of course, we saw the market come back, retest the structure, and since that moment, price action dropped significantly to the downside, giving us over about 300 pips in profit as a result of this strong bearish move. Unfortunately, we were not able to add multiple entries to this one, but it's all well and good. We did very well on the USOILSPOT as at the beginning of the week. Then during our live session on Wednesday, we begin to notice that the market has been consolidating. As you will see, as soon as price got into that $69.50 level, we saw how it became difficult for sellers to continue that momentum. And this was as a result of some new development in the market where OPEC Plus were beginning to the decision by OPEC Plus to postpone planned output increases for October and November was providing some level of support for oil prices, and this move suggests a willingness to adjust production to maintain market stability. So as a result of this development, we begin to see some buying interest come into this market, and this was revealed on the chart as you will see here. And due to this development, we decided to look out for buying opportunities above the $69.80 level, as you will see here. And of course, we had multiple buy positions triggered from that particular area. We had a 160 pips move at some point on Wednesday, and yesterday we also had about a 110 pips move before the bearish momentum began. And in both situations, after moving stop losses, we were taken out with modest profit on these positions. And with a lack of follow through in buying potential in this market, further emphasizing the consolidation phase here, what are the chances that we are going to maintain this bullish bias for today's session? Are the buyers going to gain momentum today, or are there any possibilities of sellers continuing that downtrend move? Now, before we go into that technical details, as usual, let's take a quick look at the fundamental factors behind the scenes that is influencing the sentiments in this market. Now, Top on the list is the weakening demand in oil commodity, as we talked about the concerns over demand in both the United States and China, which is weighing oil prices down. Now, the US ISM manufacturing PMI, which is of course a data that gives us an insight into the manufacturing sector in the United States, showed a fifth consecutive month of contraction in factory activities, while China's manufacturing activities fell to a 6-month low in August. This is a major concern to buyers of this market. Now, due to this reason, we all know China is the largest importer of oil in the world, and US is the largest consumer of oil in the world. Now, if these economies are not doing well, it becomes a red flag for buyers, and as a result of this, buyers will be cautious to take any aggressive bets on this commodity, and this is one of the major reasons that has influenced the bearish sentiment in this market for this week. Then another factor that also has influenced the sentiment in the market was the initial OPEC Plus decision to increase oil production during the next quarter. This was said about last week, I guess, and not until during the midweek we begin to see some new development where they are planning to postpone this output increase, which obviously has had a little bit of influence in this particular market, as we saw buy pressure happen in the last couple of days. Then in addition to this is the US crude oil inventory, where the EIA reported a significant drawdown in the US crude oil inventory. Now, this was a significant drawdown that happened this week, but I'm not sure I can remember what the figures are at this point in time. But let's talk about the implication of this. I've usually talked about this several times, but for those of us who are joining for the first time, so that we can all be on the same page. So when there is a reduced stockpile in crude oil, this simply means that there was less oil available compared to what was expected, which could potentially lead to a decrease in the supply of oil. When the supply of oil decreases, it often leads to an increase in the price of oil because there is less of it available for buyers. And this can happen because when there is less supply, buyers might be willing to pay more to secure the oil they need, which usually drives the price of oil higher. So in simple terms, the report suggests that with less oil available than expected, the price of US oil spot might go up. And we have been seeing traces of this development happen in the last couple of weeks, as you will see on the chart here, where as soon as price got into the $68.80 levels, market participants were thinking of the US oil spot cheap enough to buy at this point in time. However, it is not reasonable for them to make aggressive decision at this point due to some other factors behind the scenes which are not yet cast in stone, and that is the dovish Fed expectations. Now, we've talked about the interest rate decision expected from the Federal Reserve, where everyone is already factoring in to their decisions the fact that Feds are likely going to be cutting interest rate this month. And of course, in addition to this is the dovish comments from Fed officials, including the Chicago Fed president, where they all are increasing the likelihood of an aggressive rate cut this month. Now, this could stimulate economic activity in the US, potentially boosting oil prices. And of course, you all know when there is an interest rate cut, the US dollar, the value of the US dollar drops. And if the value of the US dollar drops, then other currencies who want to buy the US oil spot will find the US dollar cheap enough to convert to, then buy the US oil spot. Now, this usually increases the demand for oil, and our simple economics tells us that when there is an increase in demand, what happens? price will definitely rise. Now, due to this, we begin to see that sellers have lost momentum actually at this point as buy pressure persists around this area. And if we look at things from a technical standpoint going into the 4 hours time frame, there is something that I would like to call our attention to here. So this was the structure we identified on the 4 hours time frame after taking into account the character of price action in the last 2 to 3 months. Price has been finding lower highs and lower lows, and in fact we can see here that price action had evolved into a descending channel. So when we connect the series of lower highs and series of lower lows, look at what we have here. Now this is where our focus is right now, right at the support line of that descending channel, and look at what is happening here since the beginning of the week. As soon as price action tests the support line, price tends to find buy pressure in an attempt to continue an uptrend, or let me say a reversal move. As you will see, whenever price tests the support line, we see buy pressure resume, as you will see here. Though we had a little bit of a break here, and you can look at see what happened here as well. And right now price is back into that structure. Now you can see that we are at a crucial juncture where, depending on how price reacts to this area, will determine if we are going to be buying or selling today. Now, based on the fundamental factors we are seeing, we talked about earlier, chances are that this area could be a platform for new buying opportunities that could take price maybe back into the structure that was broken during the course of the week, that is the $73 area, or back into the resistance line of that descending channel, which, as you will see here, we are looking at a minimum of about 370 to a maximum of about 600 pips to catch here if price moves in that direction. However, if that does not happen and instead we get some surprise today, we never can tell, a breakdown of the support line at the $68.80 level and the support line of that descending channel could incite a crash, which could bring in selling opportunities. So you can see how crucial this area is. Depending on how market participants react to the structure will determine if we are going to be buying or selling. Now, with this information we have in mind, let's scale back down into our execution time frame. Now, that is the 1 hour time frame, of course. Now, going back into the 1 hour time frame, we are at a crucial juncture right now. What price action is back within that area, and look at what has been going on in the last 3 days. We can see there is a consolidation, price finding buyers and sellers negotiating within this area, up and down, up and down. Who is going to win this tug of war? Is it going to be the buyers, or is it going to be the sellers? But in this case scenario, whenever we have structures like this, you know how we do it. We exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range bound structure to give us an opportunity to sell. Now, with this in mind, I'm having a buy stop order sitting above the $69.80 level in an attempt to continue the uptrend move, as you will see here, and I will not be selling unless price breakdown retest the structure to join a decline to the downside. Now, there is something I would like to say here after taking into account the character of price action in the last 3 days, is that since this area here had become a barrier for sellers in the last couple of days, and after taking into account those factors that is influencing a potential bullish traction in this market, I'm thinking that we can actually risk some buy positions around this area. In fact, we've made some profit this week, so why not take risk some of the profit we have made leverage on that and risk something around this area. Now, what I'm saying here is that we can actually place a buy right now and have a stop loss way below the support line here. Let's give enough breathing space for price action to move around, maybe between 50 to 70 pips of stop loss, and build up from here. And if it actually does, then we are in a good position to maximize the potential of the bullish move by the time price breaks out of the $69.80 level. And remember what we said here on Wednesday, our TP target for the buy position is between the $71.80 level, which will be dovetailing to a minimum of 260 pips here, and this $73.25 level, which dovetails to a minimum of 400 pips. So I strongly believe that price will gain some momentum today. So let's see how the market is going to play out from that area. But if we have any surprises today that incite selling ideas, then like I said, I want to see a breakdown retest of the structure to join a downtrend move. So this is my simple view on this one or today. I hope I made myself very, very clear. If you have any questions whatsoever, feel free to let me know in the comment section, or if you have need some further clarifications as regards to my illustration, let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the financial assets on our watch list this morning. All right. So in the absence of no further questions, I want to assume that we are all on the same page. So in that regard, we will be moving on to the next asset on our watch list. I do hope you've marked out these levels accordingly on your charts, and let's give the video a thumbs up. Your likes are valuable to me. All right, so let's allow the number of likes tally with the number of people on board. So we have over 7 people on board at the moment, so I really appreciate your support by giving the video a thumbs up. And for those of you who had clicked on the like button, thank you very much. So with that being said, let's move on to the next asset on our watch list. So the next asset on our watch list this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, all our buy positions from Wednesday's trading session has actually been closed at this point in time with some modest size of profit after this bearish pressure that resumed during the early hours of today. And for those of us who are part of this profitable journey, well done and kudos to you. Now, before we go into the details, let's quickly rewind and go back into what really happened at the beginning of the week that led us into the situation we are right now. And this is most important for those who are joining us for the first time. Now, at the beginning of the week, we had a range-bound structure, remember? Price action was confined within the 1.31385 and the 1.312, our key level for the week. And for the fact that price was trading above the key level, we were confident that price will rise to the upside. But when will it rise is what we were not sure of. So as at the beginning of the week, after identifying this range-bound structure above our key level, we positioned ourselves at the breakout of the resistance line, which actually happened. We saw price breakout of structure. We had a break even at the first attempt. Unfortunately, the second attempt ended in a loss, our first loss for the week. As you will see here, price dropped to the downside. Now, on Tuesday, we had this breakdown retest of structure, giving us a sell position. That one too did not do very well as it went back into break even. Now, during our live session on Wednesday, we did acknowledge the fact that price action had broken out of a major descending trend line. So let me show you. So after we captured the character of price action since last week Tuesday, remember we identified this series of lower highs which gave us this descending trend line. And you know how we use our descending trend lines in this community. As long as price remains below them, we would continue to look out for selling ideas. But the moment this descending trend line is breached and broken to the upside, it will definitely welcome bullish ideas. Now, on Wednesday, during our live session on Wednesday, we did say here that since price has broken out of that descending trend line and retested it multiple times, we want to be looking out for buying opportunities at the breakout of our key level, which is actually in line with our principles surrounding the key level. Now, with the breakout of the 1.312, we had a new buy position triggered, and remember we had multiple levels like the 1.31385 and the 1.316, all of which we used to maximize the potential of this bullish move. So we had about 3 buy positions running, where though it has been closed right now, we had about 45 pips on the first one, we had about 30 pips on the second one, and we had about 10 pips. So we are roughly about 70-80 pips thereabout, depending on where you moved your stop losses to after the last breakout of the 1.316. Now, with all positions well secured at this, all positions closed at this point in time, how do we navigate this market today, especially as we are looking forward to the NFP? Now, before we go into that detail, let's take a quick moment to understand the major market drivers in the GBP USD market. Now, remember that this week lacks any top tier economic feature from the United Kingdom. So the US dollars, the market dynamics has been influenced majorly by economic event from the United States. And as a result of this, we talked about some major event during the course of the week, from the JOLTL's opening, jobless claim count. We talked about the ISM manufacturing PMI, the ISM service PMI, and the retail sales, BRC retail sales from the United States, from the United Kingdom. And the persistent weakness of the US dollar due to the not too good economic data from the United States provided support for the GBPUSD, and this weakness is further driven by the expectations of a Fed rate cut this month, fueled by the recent weak economic data, including the ADP report showing a slowdown in private sector job growth. Now, another factor that could also be influencing the sentiment in this market is the modest Bank of England rate cut expectation. So there's not going to be a back-to-back interest rate cut as people have suggested as at last month. Remember, last month the Bank of England cut interest rate, while the Bank of England is expected to cut interest rates one more time this year. The pace of cut is likely to be modest. So, and this is further supported by the Bank of England's governor, whose speech confirmed that inflation pressure are easing, but a victory over inflation is not yet declared. Now, this cautious approach is probably one of the major factors that is lifting the pound sterling at this point in time. Now, with that said, the upcoming NFP report is going to be a key event for the US dollar, where a weaker than expected report could further solidify expectations for a Fed rate cut, potentially leading to a larger cut and further weakening of the US dollar. Now, looking at all of these factors here, what are the chances for both buyers and sellers at this point? Well, the first thing I would like to acknowledge here is looking at the structure since price dropped into the 1.3090 area, you will obviously see that the market had formed a series and uniform higher highs and higher lows. Now, if we take a moment to connect the series of higher lows, I think we have a beautiful ascending trend line to work with. So I will thicken this a little bit to emphasize its importance. So let's bring back our candle chart so that we can make some little adjustment here. So we want to capture majority of the pivot lows, and when we come close to where price action is right now, you will see that we begin to notice some sharp rejection of the structure, which is further emphasized by buying pressure from the 1.31600 area. So for me, buying around this area after further confirmations is looking very promising at this point in time. So I want to be saying continue buy pressure here, and for those of us who are actually profitable this week can actually place a buy position around this area. But I want to wait for price to come a little bit back down into this area before I continue the uptrend move. And in fact, if that happens, we are going to be looking at adding more buy position at the breakout of the 1.31800 area. So I would like to label this. I would like you to also do as well, as it's going to be playing a significant role in helping us navigate more buying opportunities around this area. So that is what I'm looking out for here, a price buy here, and then continue that momentum to the upside at the breakout of the 1.318. However, if it so happens that sellers take over this market, what are the conditions that will make us consider selling? Well, for me to sell the GBPUSD at this juncture, I would like to see both the trend line and that 1.31600 area broken to the downside, followed by continued selling pressure to give me an opportunity to sell. And while we sell, please note that we are doing a counter trend move. As you all know, price action is still sitting above our key level at the 1.312, and if we look at the distance between here and the key level, we are talking about 40 pips. Now, if you are a counter trend trader, you're a scalper, it could be an opportunity you want to take on the GBPUSD. But if you are a long-term trader like me, I would maybe want to wait for price come back into the key level, where depending on how price reacts to the key level will determine if we will be joining an uptrend move or a breakdown welcoming selling ideas. But trust me, I will be giving us updates on both my TradingView and Telegram platform if any form of new development comes up on this chart. So this is my simple view on the GBPUSD. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions or you need some further clarifications. And if you have found this content helpful and useful, do not hesitate to give the video a thumbs up. And for those of you who had clicked on the like button, thank you very much for your support. I really do appreciate from the bottom of my heart. All right, everyone. So in the absence of no comments, no questions, I want to assume that we are all on the same page. So with that said, let's move on to the final assets on our watch list today. Stay tuned in. So the final asset we are looking at this morning is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, the gold spot has been very challenging for me this week as regards scalping this particular market. I got stopped out in multiple times during the course of the week. However, on the swing trading approach, we are doing very well, as gold is currently seeing some buying interest for the third day in a row, trading nearly its weekly peak. However, the last 18 to 24 hours has shown some hesitancy amongst investors to make big decisions, especially as everyone is looking forward to the crucial US non-farm payroll report to be released later today. And this is quite understandable, and we are going to be taking all of this into account while we review the current market structure. Now, before we go into the details here, let's quickly take a look at what really happened at the beginning of the week for educational purpose sake. Now, at the beginning of the week, remember, we had our key level at that psychological $2,500 area, as you will see here, which we did identify on the higher time frame. And for those of you who missed out on my weekend video, I will encourage you to go ahead and watch that video to see how we identified that key level. And you know how our key level is. It serves as a key determinant of guiding our trading decisions for the week. Now, during the first 24 hours of the week, it was more of price action ranging, confined around our key level between the 2,504 and the 2,490 to emphasize the prevailing uncertainty in the market at that point in time. And this, in fact, for me, led to a couple of losses scalping this particular market. However, if we look at the structure closely, as at the beginning of the week, I was telling us here on Monday, if you remember, that we will be keen on buying above the $2,500 area. And in fact, this actually led to a loss. I think on Tuesday morning, we saw price take us out of that buy position in a loss, triggering a sell position as soon as price broke down and retested that support line. And we saw price move about 160 pips thereabout before bullish traction resumed in this market. And for those of you who were part of our live session on Wednesday, we talked about how significant this $2,475 area is, and it's going to be playing a significant role in determining the next course of action. And as a result of this, I did label this area a temporary demand zone after identifying a sharp rejection of that structure on Tuesday. So I said here on Wednesday that if price finds buy pressure above the structure, then the breakout of this descending trend line here, which we identified, and the 2,490 will welcome new buy positions. Now, let me show you something on the 4 hours time frame before I go in further, so that we can all be on the same page on this one. So I did show you something on the 4 hours time frame where I did acknowledge that since the midweek of August, ever since price broke out of the 2,475, remember, this breakout led to the record high at the 2,532. Now, ever since price broke out of the structure, we can see how it has played a significant role in supporting the price of gold, as every time price comes back into this area, market participants deemed the gold cheap enough to buy. And look at what happened during the course of the week. The first attempt happened here, and then as a result of this, I said we will be looking out for buying opportunities above the structure. Though I personally came in very late on this buy position, but thank goodness we were able to join the breakout of that descending trend line at the 2,000 490 area. And of course, we marked out multiple levels like the 2500 to add more buy positions to. We also had a 2504 50 level to maximize the potential of this bullish move. Then if for those of you who are following me on both my TradingView and Telegram platform, remember I did updated us with a new trading setup that we will be using to navigate this current structure. I think that was yesterday. I shared something with us on the 15 minutes time frame, telling us that we are going to be using that to navigate the structure. Now, this is the structure I shared with you yesterday on my Telegram and TradingView platform after acknowledging the breakout of our key level right here. So I said here yesterday that if price comes back into the key level, so we are looking at somewhere between the 2504 and the 2500 to buy, but price never came back into the structure. So later on in the evening, I shared an update after noticing buy pressure around the 2507 area. So as a result of this, I named this as our second potential buy zone. And interesting enough, that level is sharing a beautiful confluence with that temporary ascending trend line you see here, all of which makes it a good idea to consider buying the gold. And I do hope you guys joined that momentum right there yesterday. If you have done so, you must be over 100 pips from this current buy position. I think about 130 pips from this current buy position. And for those who capitalize on this opportunity, well done and kudos to you. And during my update this morning, while I was after monitoring the character of price action, I included two more levels to maximize this move. One at the 2518.50, which has already been triggered at this point in time. And if you are taking this as well, we have about a $10 10 pips in profit at this point, hoping that price will continue this momentum to the upside. Now, with a very good profit on the XAUUSD so far for the second half of this week, how do we intend to navigate this market going forward? Remember, today is the last trading day of the week, where it is expected that market participants are likely going to be rounding up their trading activity ahead of the weekend. And most importantly, we are going to be looking forward to the market is going to be focusing on the US non-farm payroll report, which is expected to show that the economy added 160,000 jobs in August, and this report will be crucial for determining the direction of gold market in the near term. As you all know, the Federal Reserve chairman did say that whatever the labor-oriented data report says will determine the magnitude of interest rate cuts in the next couple of weeks. Then what other factors is influencing the XAUUSD? Well, the US dollar is under serious pressure for the third straight day as investors bet on a larger interest rate cut by the Federal Reserve, and this is providing some support for safe haven assets such as the gold. Now, there have been mixed employment data from the United States this week, which has suggested that the labor market is losing momentum, hereby raising concerns about the health of the U.S. economy. Now, this, along with the ongoing geopolitical tensions in the Middle East, is making investors more cautious about riskier assets and driving them towards safe haven assets such as gold, copper, silver, and the likes. Now, with this all factors behind the scenes, for me, I will say the path of least resistance for gold still remains very, very bullish. However, the course or the pattern through which it's going to take to continue the new high is what we don't know, but structures will definitely give us a clue into that. Now, to understand how market participants are digesting the informations that are coming in behind the scenes. Let's look at the chart to understand what is really going on here. Now, if you look at the current chart here, this is the 15 minutes time frame, right? So let's scale up a little further to the 1 hour time frame to have a broader view into what is going on here. So if you look at things on the 1 hour time frame, one thing you will notice here is the fact that price is back into a crucial juncture in this market, an area which has been known for selling pressure since this new month has begun. So if you look at this area between the 2,523 and the 2,518, you will see that buyers have been finding it difficult to break through this particular area, and this for me is not a surprise at all. Remember, market participants had been looking forward to the NFP report, and as a result of this waiting, major key players have stepped aside from the market, hence waiting for this report to come in before making any aggressive bet. So as a result, we have seen selling pressure around this area since the beginning of the week, and look at what is happening right now. We saw selling pressure happen during the early hours of today, and right now, despite price has broke trigger that third position, we can see selling pressure is still trying to negate every attempt by buyers to break through. So for me, it's looking as if market participants are cautious and not wanting to take any aggressive bet until the NFP data comes in. So because of this, now we need to exercise patience and wait for significant follow through before confirming that truly this uptrend is going to hold. Now, if price really breaks out of this zone, that will be a phenomenal opportunity to continue that uptrend move, as the breakout of this old area will signal a strength in buying power. So for me, if you're a swing trader like me, for instance, I have a very wide stop loss on this one because of possible volatility. So looking at about 200 pips thereabout for this position I'm taking here because of the volatility during the NFP. But to scalp the market, go challengers, we are going to be looking at ways through to scalp this area when the go challenge begins. So we are going to be monitoring price action around this area, and it could take a long time before we find some confirmation around this area. So let's go back into the 15 minutes time frame. So we are back into the 15 minutes time frame, and here on the 15 minutes time frame, you can see we have an ascending trend line in the last 3 days, which has supported this bullish traction. So we have a couple of them. So we have the first one right here, as you will see, and then we have the second one right here, which had already been broken to the downside. So look at it, price is trading below that ascending trend line. So will price climb back above the ascending trend line? Well, that will give us more confidence of buying the XAUUSD. However, if selling pressure continues below that ascending trend line, we might see a situation where price will drop back into this ascending trend line in an attempt to continue the uptrend move. And in fact, if price breaks down the second ascending trend line, I can tell you this might result into a massive sell-off. So you can see this trend lines we are seeing on the chart right now is going to be playing a significant role in guiding our trading decisions for today. So I do encourage us all to mark out those trend lines on our chart, as we are going to be using them to navigate this current market structure going forward. In fact, I would like to see price climb above this other trend line here, and that will make me feel comfortable adding more buy positions to my existing trade. But for the fact that price is still trading below this temporary ascending trend line, we cannot ignore the potential that price could drop back into this trend line before that uptrend happens, and if it breaks down, then it could lead into a massive sell-off. So let me see how many pips is between the 2,518 and the trend line. That's about 40 to 50 pips thereabout, where TP target could be at the support line of this range. So let me mark it out here. That's about 2,514, right? 2,514. So we want to be marking that level out. So for those of us who scalp the market, we could be looking at a TP target around the 2,514, and of course that level could be a platform that could welcome new buying opportunities after we're taken out of this one. So let's see how the market will play out here. Will the momentum continue above the 2,518? If it does, we have a buy stop order above the 2,522 to continue that uptrend move. Of course, I will be with you in the comment section of both my TradingView and Telegram platform to give us update as at when due. And of course, I will be sharing with us simple setups, maybe an hour or 30 minutes into the NFP, that will be helping us strategically positioning ourselves for whatever outcome the NFP will bring. So stay tuned in with me on both my TradingView and Telegram platform. I will be sharing some updates with you. So these are my views on the XAUUSD for today. I hope I made myself very clear. If you have questions, feel free, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off. Let's see if there are any questions before we round off today's Forex Morning Mastery. And don't forget to give the video a thumbs up. Your likes are very much valuable to me, and of course, by liking the video, you are helping this community to grow, as the YouTube algorithm will see it and push it to a wider audience of traders who may also find this content beneficial to them. So thank you very much, guys, for your support. I really do appreciate it. So in the absence of no questions, I want to assume that we are all on the same page. It has been a wonderful moment with you guys. I really appreciate every single moment. So we were able to take on all the 3 financial assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD. And we were able to identify simple trading setups that we are going to be using to navigate the current market dynamics. And I do hope you are able to mark out these levels appropriately on your chart, as we have done so far during the session. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and allow this structure to mature. And depending on what happens, our structures will lead us appropriately. Sorry, I just saw your comment now, John Alabi. Hello, John. Good morning to you. Glad to have you here. Says here that at what point will you be comfortable selling gold today if it breaks down? Well, I think I just explained that. Okay, where's the chart again? So I did say here that I would like to see both the second ascending trend line to break down before selling, and that is the second ascending trend line right here. By the time price breaks down this ascending trend line, man, it could be a good signal to join a bearish move. In fact, I would like to see some confirmations, because it could turn out to be a false breakdown. So I would like to see confirmations like breakdown, retest of structure, then that is on my lower time frame, before joining a bearish move. However, if you're a scalper, a breakdown retest of the 2518 could welcome some selling potentials before price gets into the structure, and subject to how price reacts to that trend line will now determine if we are going to be joining a bearish move or getting ready to continue the uptrend move. So the ascending trend line, like I did say earlier, is going to be playing a significant role in guiding our trading decisions today. So I hope I made myself clear there, John Alabi. All right. So with that being said, I think we have come to the end of the Forex Morning Mastery. For those who joined us for the first time, I do hope you were able to gain one or two things from what we discussed here today. And if you did, you want to be part of a subsequent edition, as the more time you spend with us, the better you get to comprehend my analytical approach, which eventually will help you in boosting your own personal trading strategies. So I look forward to seeing more of you on Monday as we start the new week. So join me again 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to start the new week on a positive note. And if you are yet to subscribe to the channel, please do right away, as I will be sharing some videos during the course of the weekend detailing my plans ahead of the new week. You don't want to miss out on these ideas, so click on that subscribe button if you are yet to do so. So you are very much welcome, John Alabi. Much love to you too, and thank you for watching. So I wish us all the best of luck. I wish you best of luck once again. Trade smart, trade consciously, and do have a wonderful evening and a wonderful weekend. Bye.